Hello everyone, I am Dr. Manoj Kumar NV, working as Associate Professor in the Department of Management Sciences, Maharaja Institute of Technology, Mysore. Today is the session which is going to consider the topic about prospectus. So, the subject title Banking and Financial Services, subject code 18 MB FM 301. And we are discussing about Unit 3 Merchant Banking. In that, today's topic is prospectus. So, as we know that prospectus is a basic document needed for each and every enterprise, each and every company, where each and every details of the company prior to the incorporation, the company must need to be provide the details of the company with respect to prospectus. So, therefore, it is a most important report, or we call it as a formal document that includes the company details, each and every information of the company which we are going to be reported in the prospectus. So, a prospectus is a formal document. So, any incorporation of the company, prior to the incorporation, the company must need to submit the prospectus towards get the approval for issuing of a share capital or for raising a debt. They must need to be prepare and need to be submit the primary document. Also, we are called it as it's a formal document for fulfilling a procedure for getting approval from the SEBI, Security Exchange Commission, that provides the details about the investment offering to the public. So, therefore, the SEBI, they are going to decide it what proportion of the capital the company can able to raise. So, the size of the company, the capital proportion, and they are going to decide about how much capital they can able to raise from the public offerings. A prospectus is filed for offerings of stocks, bonds and mutual funds. As I said, whatever the initial capital the company wants to raise from the public, they must need to be given a guarantee for them with respect to providing each and every details of the company to the Security and Exchange Commission. So, they are going to consider that how much authorized capital the company is required and what mode of the capital they can able to raise, whether they can prefer shares, they can go ahead with the bonds, or they can able to concentrate on mutual funds. So, the document can help to the investor make more informed investment decisions because it contains a host of relevant information about the investment security. So, therefore, as an investor, they can easily get to know the entire information about the company, how they are, how the capital structure is, and what size of the company, and how many employees, what the shareholders, stakeholders, and who are the proprietors. Each and every details are prescribed in the prospectus. So, therefore, it is a primary document or primary and formal document which is mainly concentrate on each and every, it provides the each and every details of the company to the stakeholders. Then we are focusing into how these prospects works. So, as I said, so company that wish to offer bond or they go for stock for sale to the public must file a prospectus with the Security and Exchange Commission as a part of the registration process. So, as earlier said, any company they go for incorporation. So, therefore, prospectus required in the time of prior incorporation, they must need to be submit the prospectus to Security Exchange Commission. So, this Security Exchange Commission, they expect each and every company must need to be submit their prospectus for registration process. So, company must file a preliminary and final prospectus. So, preliminary prospectus for getting a approval from the Security Exchange Commission. So, once they are planned the entire operations of the company, then they are coming with the final prospectus, and that must need to be submit both preliminary and final prospectus need to be submit to the Security Exchange Commission. So, the Security Exchange Commission has specific guidelines as to what is listed in the prospectus for various securities, because when the company is registered under the Security Exchange Commission, they are going to be safeguard the interest of investors, and even they must need to be scrutinize the company operation, whether they are really original or originated company, or else whether it might be part, the nature of the company, the size of the company, the investment capacity of the company, production capacity, everything they are going to be taken the information from the company side. So, the Security and Exchange Commission requires a security issuers file or a prospectus when offering investment security to the public. So, therefore, when any company which they are preferable to go for public offering, so they are going to encash the public investment in terms of share, in terms of bonds or mutual funds, they must need to be provide those security issuer files as a prospectus. So, therefore, they can able to offer the public investment in terms of different securities. So, the prospectus provides details about the investment security and the offering. As I said, as a company, they wants to raise 10 lakh rupees through the share capital, or we can take it as, instead of lakhs, we can take it as 10 crores as a authorized capital. So, out of this 10 crore, the company is not directly go for raising the entire amount. The company concentrating on only 5 crores rupees through the share capital, equity shares, and 3 crores they go for a bond or a debt instrument, and the remaining 2 crores they might be go with the internal investment, like promoters they do the investment, or else they can go for any public mode of investment. So, in terms of preference shares or in terms of any other different various sources, the company they may go for planning how they can raise the required capital to the company. So, therefore, here they can able to plan that how much they can go for public investment through the equity shares, how much they can investing through the debt. So, therefore, whatever the information they provide in the prospectus, that is going to decide that how much authorized capital they can able to issue to the public, and what are all the different modes they are using. That is also the shareholding pattern of the investors also finalized in the prospectus. A mutual fund prospects contain details on investment objectives, strategies, performance, distribution policies, fees and fund management. So, therefore, as we know that most of the dealers, or we can call it as financial advisors, they are always support to make an investment through mutual funds, and it is depends on the market, subject to market risk. When it is subject to market risk, the dealers they are going to be provide each and every information of the company, and at a point of time to make a investment or to make a sale of particular mutual fund. So, therefore, they are going to be consider the details on investment objectives. Sometimes the companies are more profitable. When they are more profitable, surely the risk covers, or the risk level is very high, and what are all the strategy the company is following, and how the performance of the company, pre-performance and the post-performance, they are going to match, and distribution policy with respect to whatever the earnings they have with respect to EPS are subjected to net profits. All these things they are going to consider the major factors when we are consider one of the tool of investment through mutual funds. So the risk of the investment are typically disclosed early in the prospectus. So as you know, prospectus is given a primary details and each and every details of the company with respect to investment, profit sharing and distribution policy, fees and the returns, everything they are going to be considered and finalized in the prospectus. So therefore, if they raise the preference shares at 10%, then they must need to be liable to pay the 10% regularly. Even for the debt, if they carry 9% interest, then 9% interest must need to be provided, even whatever the condition or circumstances in the company in the future period. So therefore, they are going to be liable when it is secured, when these two instruments are secured in nature. So because whatever we need to be pay, we need to be charged the interest or we need to be charged the preference dividend, that is fixed in the nature, and even it is secured in the nature, even though in the point of liquidation of the company. So therefore, these prospectus is going to be known to the each and every investors. They are easily realize what is the risk of their investment go through the prospectus. Then we call it as the preliminary prospectus. So the preliminary prospectus is the first offering document provided by a security issuer, and it includes most of the details of the business and transaction. So means the business name, type of the business, address of the business and capital investment. These are the basic information only consist in the preliminary prospectus. However, the preliminary prospectus does not contain the number of shares, because still they are not planned that how many shares they are going to be issued, because still it is not the particular document is not reached the Security and Exchange Commission. So therefore, they are not much concentrate into the financial parameters in the preliminary prospectus. They are only focusing on the primary information of the company with respect to the name of the company and the owners of the company and the type of the company, size of the company. These are the basic information they are going to be provided in the preliminary prospectus. Then, however, the preliminary prospectus is used to gauge interest in the market for the security being proposed. So this is one of the most important factor that the company is going to be attract the interest of investors. So they are catch the mindset of the investors through issuing a preliminary prospectus. So they are going to creating the image of the company to the investors or stakeholders. So therefore, they are going to do the balance sheet with an assumed balance sheet, and they are going to be announced about the company and its operations and the size of the company and what the purpose of the company. These are the general and basic information they are going to be provided to the investors. So therefore, the investors are going to attract to the particular company to make a future investment, even profitable investments. So therefore, the preliminary prospectus, which is helpful to the investors to aware of the information about the company. Then coming to the final prospectus. So the final prospectus contains the complete details of investment offering, because they are go for final. Once they submit the preliminary prospectus, which is evaluated by Security Exchange Commission, and after that the company must need to be submit the final prospectus. So in the final prospectus, the Security and Exchange Commission, they given a assurance and they given a permission that to raise their capital by using different sources, the proportion which is decided by the Security and Exchange Commission. Then the prospectus complete details of the investment offering to the public, and the final prospectus includes any finalized background information as well as the number of share certificate to be issued and offering price are going to be finalized. So therefore, here they are going to be finalize how many shares, the number of shares they are going to be finalizing, as well as what price they are offering to the shareholders to raise the equity share capital. Even they are providing a offering price as well as certificate of shares to the investors. Then moving to prospectus information. So the prospectus includes some of the following information. The first one is a brief summary. So the prospectus includes includes the brief summary of the company. So therefore, in the brief summary, the company must need to be provide the information of company's background as well as all overall financial information in the basic brief summary. And coming to the next one, where the company need to be provide the name of the company. So name of the company, it depends on private company or public company. When in case of private company, after the incorporation, the company must need to be provide the name as private limited. For a public company, they need not to wait for till incorporation. Immediately they can state it as public company. Then they must need to be shown how many number of shares they are going to be issued to raise their capital. Then the type of securities. The type of securities being offered, because they are going to raise the debt. When they are going to raise the debt, for the company it is mandate towards providing a security offered to raise the debt instrument. And so, and also they are going to be make state about whether an offer, whatever the offer they are going to do, either it is public or private. Offering is public or private. Most of the time, whenever the company internal stakeholders like board of directors, they are strong in the investment pattern, then they are preferring more capital for private investment, or else the company they are switch over to public investment. So therefore, majority of the equity share capital they are going to raise from the public rather than their own directors' investment. Then also it contains the information about the principal name of the company, principals. So where they are going to be confirmed regarding to the board of directors of the company, promoters of the company, their names also they are going to be mentioned in the prospectus. Even sometimes they are started the business by investing equal investment, the board of directors they are going to do it. At that time, the profit sharing ratio also need to be mentioned in the prospectus, and even then they must need to be mentioned about the name of the bank, or the financial institution or financial companies performing the underwriting. So this is also one of the most important thing where they go for underwriting. When they go for underwriting, they are going to be focused on how early they are going to raise the capital. Behalf of the company, the underwriters they are going to be raise the capital to the company. So where they are going to raise their capital without having much risk, they can easily raise the capital when they prefer the whatever we had a financial institution or financial intermediaries, they are performing as a underwriters for the company towards raise their capital. Then moving to types of prospectus. So when we are consider the types of prospectus, we have a 4 category of prospectus. The first category is preliminary prospectus. Preliminary prospectus. And the second one is arbitraged prospectus, and the third one is shelf prospectus, and the fourth one is deemed prospectus. So these are the major 4 category in the prospectus in terms of the nature of prospectus. So there are several different types of a prospectus. Even earlier we are discussed preliminary prospectus and final prospectus. It depends on the time period. But here, based on the nature of the prospectus, we are categorizing to 4. So therefore, generally they fall into one of these 4 category. So preliminary prospectus, a prospectus for stocks and bonds is issued in different stages. As we know, simultaneously the company is not go for all the types of investment. They are planned towards when to raise the equity, when to raise the debt. So therefore, the first stage is the preliminary prospectus, which contains the details of the business and proposed financial action. So means they are planned that what is the capital requirement, what size of the company in the preliminary prospectus only contains the information about the business and proposed financial action. Then coming to the second one, that is arbitrage prospectus. An arbitrage prospectus is the basically includes the summary of a prospectus. It contains all the important features of a prospectus in a condensed and reader friendly version. So therefore, instead of providing a lengthy prospectus, it is given a summarized information of the company. So therefore, we are called it as arbitrage prospectus, because as an investor they are not looking to each and every information. Whatever the information which is catchy or most attractive, they are focusing on that. So therefore, for them it is most benefited to go for arbitrage prospectus. Then the third type is shelf prospectus. So this refers to the shelf life of the information and it's only relevant for 1 year or less. So means immediately after 1 year, whatever the performance of the company, based on that they want to show how they are more profitable or more encouraging towards investors investment. So therefore, at that time they can go for shelf prospectus, where they are going to be incorporate the information of 1 year or less than a year information. They can able to focus towards attracting and catching the company's image by the investors. So generally only finance based companies are eligible for creating a shelf prospectus, because they can easily show what is the growth, what is the profitability, what is the turnover which is rise and which is have a growth from the previous year to current year, that they can easily focus and make it available with respect to the growth and which is enhanced by the company in terms of performance. So therefore, the shelf prospectus, which is mainly used in the financial companies, the finance based companies, they are going to be provide the shelf prospectus. Then the last category is deemed prospectus. So deemed prospectus means when the company agrees to give shares to an issuing house and then later sell to the public, the document disclosing the offering is deemed to be a prospectus. So means the company plan to agree to give a shares to the issuing house, but later the stage they are going to be sell those shares. Instead of they are issuing at house, they are going to sell those shares to the public. So therefore, whatever the document they are disclosing towards selling the shares to the public, the particular offer is deemed to be a prospectus. So therefore, whatever they are showing to the shareholders that the company may profitable, the company have a future expansion plans, or the company have a future growth, all these whatever they make that the investors to do the investment to the company, that offer, whatever the information they are provided, disclose the information to the investors, that information deemed to be a prospectus. So therefore, any different or various prospectus we had, those prospectus are fall into one of the category or one of the type of the prospectus. So hope you are understand about what is prospectus and why it is most important, and when in the incorporation of the company, why the companies must need to be concentrate towards providing the best information with respect to preliminary prospectus and final prospectus, and from the incorporation point of view, why it is most important from the Security and Exchange Commission, and what are all the legal aspects the company must need to be fulfilled to go for public offering. So in the easy manner, we can say that when the preliminary prospectus, it is a primary document where it is includes only the details about the company and company operations and future financial action, futuristic financial action. But when we coming into the final prospectus is most important, where it is shown the each and every details of the company with respect to the whole information about the company, like whatever we are reported here, the brief summary of the company and name of the company, name, number of share which they are going to be raised to the public, and type of securities being offered when they go for the borrowings or when they go for loan. They must need to provide those securities information, and whether an offering is public or private, whether they are planned towards, they have a promoter's investment and they have a public offerings. That proportion also decided in the prospectus itself, in final prospectus. And name of the company principals, where the promoters and promoter shareholding pattern, they are going to be shown in the prospectus. And name of the bank or financial companies, so means where they are going to be provide the funds and they are going to be raising capital behalf of the company. They are performing as an underwriter to raise the capital to the company. So these are the entire information of the financial aspects and whole company information which is disclosed in the final prospectus, and the final prospectus which is going to be approved by Security and Exchange Commission. And there also the whatever the modes of finance they are using, they are also focusing into how they are raising, how many shares they are raising, what price, issuing price they are offering the shares, each and every details of the company they are going to provide it. So therefore, for the company, the major benefit of the prospectus is reaching is become very easy. They can easily reach the each and every stakeholders, providing the right prospectus at the right time. So therefore, even they can focusing into whatever the achievements they made or whatever the profitability which they are enhanced, easily they can highlight and they can expose that into the public. And even we are discussed about the types, where the types majorly categorized into 4, as we discussed earlier. That is preliminary, the first one is preliminary prospectus. It is concentrating towards providing the company basic information and the futuristic financial action plan. And arbitraged prospectus, where they are concentrating towards how they are going to be planned to provide the details of our summary of the prospectus, is stating as arbitraged prospectus. So for the investors, instead of providing the detailed prospectus, better to provide the arbitraged prospectus, where it is summarized the entire details and showing the better strengths of the company to the public. So therefore, it is helpful to make attract to the investor to make an investment to the company. And shelf prospectus, it is also one of the best way where they can focusing into shown what is the company performance, what is the company's strength in the financial aspects, that they can able to incorporate in the prospectus in a year or less than a year. They can able to show what is the growth, what is the enhancement of the business, and what is the futuristic plans or path, futuristic path. They can easily shown that in the self prospectus. That will be helpful to go for any further capital issues. Then they can easily go for shelf prospectus, where they can able to encourage the investors by showing the immediate whatever the achievements they done in the short span of time. And the last one is deemed prospectus. So when a company they go for agree to give a shares to an issuing house, and other than later they are going to be sell those shares into public. So means instead of keeping those shares in the company plans to issue those shares or sell those shares to the public. When they sell those shares to the public, whatever the information they provided to the particular shareholders, those information are whatever the information they are detailed for offering the particular shares to the public, those information deemed to be considered as deemed prospectus. So today we are given a highlight on the each and every aspect of prospectus. Hope everybody are understand about the prospectus and its importance and what is the nature of the prospectus and what are the characteristics and what are all the documents and information details which are required and in the prospectus, as well as we have discussed the types of prospectus. So hope you are understand the all concepts which is discussed today. So thank you for your listening. Thank you one and all.